Our next speaker is Ed Birkin, Senior Analyst at H2 Gambling Capital, who will be able to provide us with some specific facts and figures about these markets. Ed, please come to the stage, and thank you for being here. Welcome.
Thank you, Willem, and thank you for having me. Now, I know a good presentation should have a very few slides to talk around. Unfortunately, I've done the complete opposite. So there are quite a few slides, and some of them I will purposefully be going through very quickly, just because I wanted to give an overview of the European market before we go into Germany. But if there's anything at the end you would like questions about, either for here or the coffee, then please feel free. So this is a quick disclaimer saying what I say doesn't have to be true. So we've been tracking the industry in real time since 2000. We have forecasts going out to 2027. We look at all aspects of the market, land-based, online, legal and illegal. Just quickly on illegal, to clarify how we look at it. We look at the market in three ways. We have white, which is where you are licensed in the same jurisdiction as where you are operating. So if you're in Germany, you have a German license. We also cover the grey market, where if you're licensed elsewhere, but you're operating in Germany, such as a Malta license, Gibraltar, that'll be classed as grey. And black market is operators who don't have any license anywhere at all. We don't track the black market, but in Europe it tends to be relatively small compared to someone like Asia or the US. Most of what was being talked about as black market activity here, we would class as grey. So a Curaçao license, we would class as grey. So quickly on the European market, this just to show the impact of COVID. So 2022 is the first year we're expecting to get back above 2019 levels, and the total gross win, so revenues by operators, is about 123 billion euros for land-based and online in 2022. What we saw was a significant increase in the online penetration, twofold. Firstly, online grew significantly during COVID, but also with the land-based being depressed due to closures, and it went up to 43% in 2021 compared to 27% of revenues in 2019. And our base case is now that we continue to be about 5% higher than we were on pre-pandemic levels, as there's been a certain level of stickiness in the shift to online. We do have a bull case of it going up to 60%. There we go. This is, I say, it's a bull case. It would involve a substantial substitution from land-based. It's not our core case, but we are seeing in certain markets where land-based isn't recovering, how you could see over the next few years a transition to have well over 50% of the market being online. So looking at Europe, what we're seeing in 2021, European gross win was just over 100 billion. That was down from 113. As you can see, the dark blue lines had yet to recover for the land-based. There's still a lot of lockdowns. Although the online penetration has fallen again in 2022, in actual terms, the online market continues to grow. And looking out over the next 5 years, we expect the online market to grow at a 10% compound growth rate, whereas the land-based market through Europe as a whole to remain flat. Total market growing just over 3.5%. In terms of percentage of online in Europe, this regulated, we currently have it at just over 80% in 2022. So this is saying where operators are licensed in the same jurisdiction that their customers are. However, and we call this channeling, the rate differs substantially across and even within markets across different products. So, what has been the biggest driver of online penetration? And this is in terms of the penetration online rather than how much is onshore, offshore. It's actually being more culture rather than regulation. I mean, Norway, Sweden, really high up there at 57%. You may think that the UK would be higher given it regulated earlier. I think Italy is a very good example, one of the first to regulate, but actually only 11% of the market is online, given historically they've had such a strong and still do land-based sector. Germany, we have at 24% of the market. This is both the legal and illegal. So a quarter of the market is online. However, regulation has the biggest impact on channelization. This is where Germany is very difficult to look at the onshore-offshore at the moment. If we were to take the Dutch market, for example, as one that I think a lot of people are familiar with that recently regulated, it's very clear if you have a license in the Netherlands, you are onshore. If you don't have a license in the Netherlands, you are offshore. In Germany at the moment, there is the issue where a lot of operators are paying tax but are not licensed. Some of these operators who are paying tax are not compliant. Some don't even want to get a license. So what actually classes as onshore and offshore at the moment? Given the fact there are no poker licenses, you would say that 100% of the poker market is offshore. You would also say that the vast majority of the online slot market is offshore, given that there are only 9 operators who actually have a license, and not all of these are operational, even though there's a run rate of over €1 billion of revenue from people who are paying tax. So on here, for Germany, we look at the gaming side, and we estimate about 84% of the market is paying tax. This does not mean they're licensed. This does not necessarily mean they're even compliant. But in terms of the tax revenue we are seeing, about 84%. And likewise with sports, is a bit clearer, about 90% are paying tax. But that does not mean all of these are paying tax are necessarily licensed. A high level of channelization, the UK we're at over 95%. I think that the target at the moment is 85% in the Netherlands. You see other markets like Norway at 33%. France, no online casino, obviously therefore significantly lower. Over 20% of the market remains offshore. And the same with Poland, where they have a high rate of onshore channelization for their sports betting, which is an open commercial market, whereas they have only a 50% rate for their casino, which is a monopoly. And you can see for Europe as a whole, it's around 80%, and for the EU, it's 75%, with Europe being dragged up by the UK. So when looking at channelization, 85%, 95% is what people should be aiming for. 85% for a newly regulated market such as the Netherlands seems actually quite a sensible initial target. So factors affecting channelization is, we look at market equilibrium. We say the government needs to have control, it needs to have tax, and it should be looking at player security. But as has been said yesterday, you can't over-regulate. Players need to have choice and value, and therefore protection by going for onshore operators. And operators must have profit, and they must be able to offer a certain number of products. So looking at Germany. This is where I said it's a unique case. Onshore is typically where operators are locally licensed, and we've gone through the offshore and black market. But with Germany, it's very different, where companies are operating for what the regulators believe is illegally, but the companies are saying, well, we pay tax, and we're going through the process. So an onshore estimate is very, very difficult to even get to by the fact of a definition. And as an example, the Ministry of Finance published, it collected €400 million of tax from online sports betting online slot operators from gaming machines and poker before it even granted its first license in May 2022. We're therefore showing what, at the moment, the onshore estimates as those on the tax disclosure, even though the majority of these are not licensed. For 2021, we did this based on assuming the regulations had come into play on the 1st of January rather than the 1st of July, so we annualized the data. And we can see there that there's about €2.5 billion of revenue that was taxed, and we estimate 360 million of revenue from operators who weren't paying tax. In terms of betting versus gaming, the vast majority of markets we look at, gaming is a bigger market. However, given the restrictive nature in Germany at the moment, betting remains a larger market, about 1.3 billion of revenue based on the tax data that was shown yesterday, and about 1.2 billion of revenue at the moment run rate for the onshore slots/poker market that's being reported. Now, if we're looking at the gaming market in particular, so the market we estimate for the online casino, this includes poker, table games, slots, was running at about a €2 billion run rate in 2020. With the implementation of the new regulations, this fell slightly to 1.9 billion. As we say, last year we get about 1.2 billion. We have made an estimate of the non-taxed slots and non-taxed table games, so operators who are continuing to offer their services into the German market but without paying any tax, being a combined 220 million. So about 84% of the online gaming market by revenue was paying tax on their online gaming revenues in 2021, assuming the tax prorated, so assuming it had been the case for the whole year rather than just from July. However, within that, we believe there are a number of operators who are including all online casino revenues in their tax forms, and therefore what is put down as slots and under the disclosure from the Ministry of Finance is not necessarily all slot data. Some of those would be including table games in there. There are a number of sites, including ones that have a .de suffix, not licensed, who continue to offer live casino and other table games. So again, this is saying the vast majority continues to be paid tax upon, but is not necessarily licensed operators. And while I'm waiting for this to work, I see there's two issues. Is one, the market overall, given the change in regulation, has declined substantially from 2 billion to 1.4. So you are seeing a reduction in overall player spend, but also it's the shift of where that player spend has gone. Now, this was a difficult slide to put together because what exactly is a compliant and non-compliant operator? The vast majority of operators are semi-compliant. Now, what does that mean? It may mean they've taken table games off their site, but continue to offer higher stake slots. It may be that they are offering slots with the right time between spins, the right maximum stakes, but not all of their slot content has necessarily been approved game by game by the operator, the regulator, sorry. However, for the first few months of when the regulation was introduced, we tried to make a clear distinction between operators who we knew were moving towards compliance and making an effort at removing table games, and operators who clearly had no interest at the time to being compliant and were accepting all of these players who suddenly had their options on their favored sites removed. And what we saw is that as the major listed operators who are disclosing what was happening in Germany, who are becoming more compliant, we're talking about 70-80% reductions in their German gaming revenues online. We had seen these other non-compliant operators see their web traffic triple in size in the first few months. So there was, while the market overall, as I said, had declined by about 28% in our view, this didn't mean it was 28% for everyone. We had seen 70-80% declines for some of the operators. Some other operators, such as Bet365, shut down their gaming site entirely. And there were other operators who were seeing their web traffic tripling as they were continuing to offer the same as they had done before. So what's the future of the German online market? Well, I suppose first of all we need to decide what actually onshore is. If we're going to have a 100% target of onshore, is that 100% of operators paying tax? Is that 100% of operators being compliant, going through the licensing process? Not all operators who are going through the licensing process necessarily want a license, but if you can drag this out for a few years and pay tax, you're in quite a good position. Or is it actually having a license? And why is there a difference? If you can pay tax but not have a product which is compliant, and therefore have a competitive advantage over other operators. If you're short term, why would you necessarily want to finish the licensing process and get a license? As far as I'm aware, this is the only market that you pay tax without having a license. And there are different incentives there. There are currently legal proceedings going against operators who are viewed as operating illegally, but who are saying, well, we've paid tax over the past 10 years, so what have we done wrong? What is the enforcement? I know we've talked about that, and the enforcement is becoming stringent, and it is a very important part of the process. But the easier part of the process, the more effective one, is having a regime where the players don't want to use these other sites, don't need to use the other sites. What's the future of online table games? When will the different lenders launch online table games? Who will have a commercial market? Who will have a monopolistic market? And then the regulatory reform, games. There are operators who potentially don't want to get a license just yet because although all of their games conform to the same standards, they are not all individually approved, and therefore their content would have to reduce substantially. Can a deposit limit be applied across multiple operators? That's something that other people can speak about much better than I can. So, quickly, the online table games opportunity. What's the size of the prize for the lender in terms of online table games? I've looked at this two ways. I've looked at the UK, Italy, Sweden, Spain. RNG is random number generated table games. Live casino is live casino table games. And we've looked at it on the spend per capita. So if we looked at Germany based on the average spend per adult of the UK, Italy, Sweden, and Spain, and they are very different, as you can see, going from 18 euros per adult in the UK to only 4 in Spain. This would suggest you could have a table market, online tables, of around 800 million euros. If we were to base it on tables on average being 21% of online casino revenue, slots being 79%, and we were saying that the online casino market in Germany in 2020 had a 2 billion euro run rate, this would imply a market size of just over 400 million. Now, that's quite a broad range. However, we think it's likely to be towards the lower end, given in some of the lender there's going to be a monopolistic market on this. If it were a commercial market across the whole of Germany, we would expect it to be towards the top end of the range. However, it is still a substantial market size for something that is yet to be regulated. Just want to quickly run through, before we finish, regulatory impacts in some other key markets. So, what impact does regulation have? Sweden introduced deposit restrictions during COVID and bonus limits, and we believe over the 2 years, 2020-2021, the Swedish market was about 32% lower than comparing it to the growth rates in markets that hadn't introduced these limits. Now, that doesn't all mean it's gone to offshore, so maybe a smaller market size is the aim. Some of it would have gone offshore, some of it would have just been lower spend. Denmark, 36% lower. They had players setting mandatory deposit restrictions and restrictions in bonus, and they also increased their tax rate from 20 to 28%. So we have seen examples where there is a direct impact on the market size from regulation. Now, a point was made yesterday, deposit limit, 1,000 euros per month. What's the issue? Well, say for most people, it's too high. For millionaires, it's too low. But a general question we get is, or general comment is, most players don't deposit that, so why does it matter? Denmark, we did a report. We got some very good data from operators there, and they spit out what they viewed as the impact on their sophisticated players and on the more recreational players. And their overall, these operators, commercial online operators, saw their revenues fall from the restrictions on deposits about 17%. However, the recreational players only saw a circa 10% decline in their spend. Their more sophisticated players saw a 30% decline. And what was more concerning for them was that 12% of this was where players had just stopped spending. And these players did not give up gambling. So this is where you do see there is a certain cohort of players that need to be taken into account, that when you impose regulatory limits on them, will shift to other operators and will make it much harder to get your channelization high. This is just showing a relationship between the channelization and tax when we had the increase in the tax rate in Denmark. Finally, Poland, I just want to use an example. The online betting market in Poland is an open commercial market, and at 90% of that is onshore. By contrast, the online casino market is a monopoly, and only 50% of the market is onshore. And this shows that it is about regulation and not just about anything else that dictates the channelization. Although we do note that as well as being monopolistic, there are significant restrictions on advertising, which has meant the onshore market is much lower in casino. So finally, out of time, the global and European market has fully recovered since COVID. The online penetration rate is about 5% higher than the run rate it was before COVID, and that is stuck. Germany, it's impossible to track onshore because we don't actually know what onshore is at the moment, for being honest. There's still a lot of uncertainty. The market is currently around 30 to 40% lower in our estimates than pre-regulation. And although 84% of this is taxed, that does not mean it's legal or compliant. And the online table games opportunity could be worth between 4 and 800 million euros, depending on how it gets licensed in future. Thank you. I don't know if we have time for questions now, but I'm around during the coffee break later if anyone would like to get in contact.
Thank you, Ed. Please stay here. We do have time for a couple of questions. Again, we encourage you to ask questions in Slido or just raise your hand and we'll come to you with a microphone. If you have any questions, please tell us now. We get a microphone to you. Any questions to Ed? Then let's look at some of the Slido questions. Ed, could you tell a bit more about your methodology? How do you get your data and how do you know it's accurate?
So, in general, the most accurate and best one is something like the UK or many other markets where you get actual data from the regulator and you trust its accuracy for the onshore. So obviously markets when you go to Africa, LATAM, where you get none of this. For Germany, there's a lot of data that was given by the main operators, especially when they had to reduce their exposure or when the regulatory change came in. So they'll tell you about how much their revenues had dropped. You can then work out what proportion of revenues Germany was for them based on the impact on their overall ones. And then for the offshore, and we also have the tax data that we then work back from the tax rate to stakes and an implied GGR margin. And then for the truly offshore, we use web traffic analysis and make an assumption on spend per head. So it is not perfect, but there are different ones we put together so that if they all make sense, we believe in the right ballpark.
Okay. Thank you, Ed. Second question. I think there was a second question in Slido. Ed, what do you expect the impact of German regulation and enforcement to be on these numbers? I mean, part of it you already did address, but...
Yeah. I mean, it depends on how it's enforced. I mean, what I don't know, and which was why I cheated a bit and didn't say in 5 years this will be the onshore and this will be the offshore, is because I just don't know in 5 years whether there'll be operators paying tax but not licensed. You know, can we take the tax data in 2027 and say these are all licensed operators? You know, I think that will be difficult. In general, I believe there will be more over time, the regulations and enforcement coming into play and the shift to regulators. I think without a doubt, more of the revenues will be onshore. I believe with licensed operators, and the market overall, though, will be smaller. If players are currently wagering 10, 20 euros a spin and playing table games, and these operators they are playing on get shut down, they will not spend as much with the licensed operators because they just can't with the mechanics of the regulation. Okay. So you will see more go to licensed operators, and you will see the overall market size reduce. But there will always be people who will find quite easily product that they want to play. And if you don't allow them to use table games, and if you don't allow them to wager more than €1, there will always be, hopefully not as targets, but in my view, there will always be an offshore non-licensed market.
That's very key. Let's leave it at this. You also have an open offer from Ed to ask him questions during the coffee break. So Ed, thank you very much for joining us.
Thank you, William. Thank you for having me.
Thank you.